Hello friends, welcome back for more Bitcoin technical analysis with me, your pal Rocky Outcrop. And in yesterday's episode, what we were speaking about was how there's a few different pivot points in the market. We applied the head and shoulders narrative to that, all those different points to come up with a way of kind of articulating it and understanding it, which is easily accessible, I think. And we're going to kind of pick up where we left off yesterday, really, I suppose, in essence here. And actually, up behind me at the minute, you can see the Bitcoin chart. That's the 24-hour chart, and it's very messy and loud. So I will just, I'll just get rid of some of that for now. Okay, calm down a bit. And what's the current price? 6,651. Okay, so we've actually been getting rid of these moving averages for just a second here as we start off on the analysis. So what was that head and shoulders chat, and is it still potentially viable? Over here in the 24-hour chart, it doesn't look so great, with this shoulder being so much higher than this shoulder and all that sort of stuff. But if we go to the 12-hour chart, for instance, then it suddenly snapped back into place again, where you've got this shoulder here, this going to be in the head, and this being the shoulder here. Now, am I actually, that concerned about this as an actual pattern? Not really. That was just sort of a way of articulating a message, and kind of getting a concept across. And the concept is, of course, about these key pivot points in the market and identifying where they are and finding them. And we've been through that quite a bit with all this. Now, there's various different Fibonacci's on there. There's patterns drawn on, horizontal lines. There's quite a lot of mess in there. And actually, in yesterday's video, they all get kind of summed up well enough for us. There's a couple of key ones that I could point out the subscribers to the channel, of course, will know where I've drawn all these things in. I don't need to repeat all that a million times, but just for where we have a couple of key levels. For instance, you've got this sort of 5,500 area where the 236 is on this particular Fibonacci. You've got this 6,153 area where the 236 is on another Fibonacci, and you've got of the 382 then here at 6,450, and then you've got the the 382 of another Fibonacci here at 6,977,000 or so, and sort of zones and pockets and all this sort of jazz in between. So if you want to watch yesterday's video and see how all that kind of comes together and try and articulate what other people are talking about in the market, then you can. And it's funny though, in a sense, because what's happened since then. So let's just go down to it's not funny. Let's go down to the lower time frames to sort of take a look at it and see that there's this number here. You'll remember 6,150. We just spoke about a second ago, and we came down here, tested that sort of last night, and then spent the next 4 hours putting in a big old green old candle here and coming right on up to the 6,700-ish area. And that's in a sense, kind of where we were looking to the prices here and thinking, well, if they drop on down, then maybe this will be the top of our shoulder and psychologically. So yeah, we've come up here and put in another a high. So how does that pan out in terms of the RSI, for instance? Well, you've got to come up here and you've got a test of the bullish control zone. This top area here is like an easy way of saying this is it's nice to have these different areas on the RSI. So basically, you quite frequently see things come up and testing around these areas, and this is one of those sort of pivot areas. So we came up here and tested that, and we came down since. So could we see it come down and try the moving average here again, and maybe go towards the neutral line? Of course we could. Overall, though, as there's no divergence there in this chunk of time just here, so there's no divergence there. Looking at the tops in this sort of so-called 4-hour uptrend, and there's no continuation style divergence, no hidden bullish divergence to be had here either, which would be a lower low coming in on the RSI, all that jazz. So that the situation here in this last little chunk here is all sort of so positive and everything else, and that doesn't actually take away from the head and shoulders narrative. I mean, that's how these things also kind of work as well. So we've got this little run of positivity. How does this little run of positivity compare with other oscillators and with the lead up to this area then, in that sense? So the stochastics, you've got a little touch of bearish divergence possibly coming in here, obviously depending on whether or not these things turn around. Of course, this high hasn't necessarily been set in yet. The prices are up here currently. It hasn't been set in yet because we haven't come down lower. Of course, it could still get higher. So And then anyway, this trend indicator down below, it's shaping up all right. We've got the ADX going up above 20, and there's divergence between the two, positive and negative sort of prongs of that thing. So and so that's this area. But compared to then over here, where we had bearish divergence, so we had a high here in the RSI and stochastics, and then it was lower in this section as we put in the next high. So there's your bearish divergence. How have we shaping up in terms of where we've come so far? Well, actually, the RSI is still currently below there, and so is the stochastics below where we were previously as well. So, coming in here, we would need to set in a higher high, and you'd also kind of want to see these oscillators down below also kind of tick up and keep going up, go into the bullish control zone, for instance, come up here and really kind of stick around in this oversold area, overbought area for a bit longer, so you could try and do that before setting in any other lows just now, if that's what you were looking at. So and then up to the 12 hours, I suppose, and take a look at this at the general shape here of this kind of head and shoulders type concept, and how that's panning out. Well, we can see that we spent so far this 12-hour candle, which there are 9 hours and 46 minutes, of course, left in, going down the way. And we had this small sort of indecision style candle stretching there here at the top, though, which would all tie in again with that narrative. So where are we now? Well, we find ourselves in Scotland. Sometimes instead of saying our, we say were. So anyway, we find ourselves on the precipice then, where we have to decide where exactly the prices are going, and this is of no surprise really to be looking at this at this juncture, because that's what always happens when you're here at decision making points in the market. So we can stick all the junk back on here, and you can see then that the simple decision that we have to make is not complicated, overcomplicated by lots of other things here, is whether or not we're going to go up and try and make highs. So 6,780, 6,800 opening, closing, sort of decent enough time candles up there, and testing these Fibonacci's up above, for instance, or if indeed we're just going to go back down again from around about here. That's the decision. And why do I say it's not got any sort of extra junk added in is because just in this zone where I'm kind of hovering around, you can see we're in the middle of this lower half of the this channel area. There's no real footholds below or above necessarily just to latch onto right now and push that extra $20 just to achieve this or that, other than this previous high. Down here, when we're coming down towards that 6,150 level, of course, we had both the 236 Fibonacci and this channel coming in here and kind of giving you a couple of reasons to sort of say, well, hey, look, there's a couple of things going on here at this particular thing. So that's more of a pivot point than, say, where we are right now, just in terms of the bigger shape of things. Here, we could go down here and then could go up again, in which case eventually you stop talking about the sort of the psychology of the head and shoulders, because we wouldn't be looking at the same sort of tests happening again and again. But if it did go down, if the prices did come down here, then that kind of amplifies that same sort of thing. So that's where we're looking really, and between these two sections here would be a sort of potential profit-taking zones, as well as just for sort of short-term plays, and also decent enough long entries as well for sort of in terms of risk management and how you can manage your risk and everything else. Going back up to the 24-hour chart here, and taking a look again just more broadly at this channel and where we've come so far. We've not really made up to the median line, the heart line there of that thing. And of course, like I say in so many episodes, these things are subjective, and you can just go ahead now and even move it like that, and it brings it almost right to the median line. And I think like a lot of people don't want to ever talk about, on the one hand, like if you move these things, it makes you maybe seem like you've just got flexible boundaries and you don't know where you're where you're making your decisions at in the market. That's understandable. And if you or maybe that you're sort of not professional, that you haven't, that you should get it right first time every time. And that's not how these things work. You've got to remember that as a human being, that these things are obviously going to be subjective, and you can there's always going to be a degree of shift in these things, no matter what. if you're a newbie or if you've been at it 100 years, or you just find you find these things are subjective. Okay, that just is just from the start to the end of your trading career, it'll always be subjective. So anyway, we could say that we're coming in close enough to the middle here of this line, and maybe that's where you've got another sort of confluence factor, if you like, to say there's sort of negative pressure there, and we're coming up towards the neutral line here. You can see in the past, for instance, over here where it's acted as potentially acted as resistance. We've got that on the go. Yesterday we spoke about how you could potentially have a head and shoulders type thing appearing on the 24-hour chart, for instance, here, and that's not really happened. So on the positive side, you've got this higher high here than here, negating that as a question. But then on the negative side, and it's more of a negative thing really, you can see over here where we were looking at compared to here, it's actually not as high. So this here is starting to become sort of somewhat divergent. So we're not achieving any highs until such times as we go above 6,780, or whatever I suppose would be a decent enough manageable area for how you could consider your risk management on the upside, and then and there's your sort of first port of call on the downside, 6,450, and then everything else is just currently sort of just having to just sort of wind itself out. This is the we were standing on the shoreline looking at the waters, saying we're going to get in a boat here and go out to sea in a minute, and you can see there's waves going around, but you're standing on solid ground and you think, well, this is going to be good crack, let's just see how things go. Then of course you go out to sea and you start getting shaken around, and that's where we are now, on this precipice where we find ourselves. As I said, we're seeing how the things just have to bobble around and how they get on until we make it to the next shore, and that's just how things are going. So thanks very much for tuning in, liking, subscribing, all that sort of stuff, and I'll see you in the next episode. Welcome to the family, all that sort of good jazz. Thank you to everybody who's liked, commented, subscribed, and everything so far along the way. And I see an analogy there was pretty rubbish, but I think I get the point, I think shakiness. See you next time.